Okay, so good morning, Forex6 Pro Group. So this video will be private only. So we took the last long here, right on the Monday lows, as I said, inside the data feed. You saw it. So this is the spike we saw that came right on the Monday lows. I have this line there since yesterday. You see we came back here too. After this bounce, we came back to get some momentum, pump momentum, and we had this move. So that was tonight after this drop yesterday on the employment data. So we have the London Open in a few minutes now. So we are seeing some shaking moves. So yesterday we had this open job data, as I said. At the same time, we had this open job that was slightly positive, of course, and a very bad ISM, but people only looked at the job data, which is not really logical. But anyway, market is not always logical. So they think the most the job comes, the economy is great. But or they think the most jobs are open, the most Fed will hike, because Fed, which is crazy what we see, what we can say here, but Fed wants to destroy more jobs, because destroying job or offering less job, they will decrease the demand on the market, which will help them to reduce the inflation. That's crazy, but that's what the way they think. So, and they said it, it's clear. So, of course, when you have less people with working, you have less people with money, so you have less people spending, and they hope that the fact that there is less spending will make the inflation reduced. But we saw that the spending, the consumer spending, has already reduced, and the inflation is not slowing down, because it's a long-term process, and they should know that, and they know that, but they have to do something, or to look like they do something. Same thing here in Europe. But in Europe, they do not hike too fast, because they don't want to really destroy the growth, even if the growth will slow down and there will be a recession like in US next year. But they want to be more careful on that point, because they know that inflation will not disappear just by hiking rates, and the day after it won't change. So that's what we have. So concerning the chart, we are here. I added a second trend line there, because this trend line, well, if we look on a little bit bigger time frame, comes to this low and this one. So it's a different way to draw this trend line. I will show you how I did it and explain why. So when we look at this big time frame chart, we have drawn this trend line and the channel here, which is the channel from this top. I took this top and that one and that one. So you have much more touch on this trend line than if we draw it on the top. And when I draw it, I saw that the last touch, if we look on a 4-hour, yesterday and yesterday and the day before yesterday, we see that we have used this one. So I think it's more accurate than taking only the highs, because this one has more touch, and the more touch we have on the trend line, the stronger it is. So it's a little bit tricky, but that's the thing about the trend lines. Sometimes we should, better than draw a trend line, draw an area, like something like take the highs and take some body stop or something like that. Like you take this daily chart and you would do something like this, which is what I do. You saw it on the other chart I draw for the I would draw it with a polygon, but so you would draw like this. You take the highs here, for example, and then we will modify this, and then you take this, the body is here, okay, you see? We take the body, so I will go up because this thing is bothering me. So you take this like that, for example, okay, and then we connect it here. So this would be what I would look at for the complete area, for potential trend line area. I would perhaps put this one a little bit higher, but you see here we have the bodies. Here we have the bodies. Body is volume. It means where we have activity, and that's what we should look. We should look at this complete area and not only one line and get mad when we break the line and get happy when we are above the line. So it's something important because, as I said, market do not mind or do not care about just one line. This is an area, and this area is holding the price. Of course, this line here looks to be much more accurate because of what I just explained. So this is something we keep in mind for the next time. So the London opened already. So we keep on pushing. We are on what the majority of the people are looking at, the trend line, which is this one here. We are breaking above, so that's good. We are long already from there. I don't know if you are long. Let me know in the chat, please, so I know who is in and not. So we are long here. And the other thing I wanted to show you this morning is something about volume profile. So I am going to bank something here. I will wait for the London +5 to see if we have a follow through. I will just bank some pips here because we are in the London Open. So I banked from the last long there, which is 15 pips. I will post it in the feed. Okay. So what I was saying is, this is my working chart, my work chart. You see it here, it's work chart. So every day, depending if we go much lower or not, or if I do any modification like this trend line, which is the trend line I took from there, this one. So I add it. And if we go lower, or if I think we can go lower, then I update. I put the next level in pivots, in fib, everything on this chart. So in one chart, because you see I have a lot of charts here, working charts, and in one chart I have everything. So something I wanted to add in case on the okay, great, Shiva, great. So you should bank some, probably 1/3, and then you let it run. Anyway, it's up to you, but that's what I did. So one thing I use is the volume tools. So the volume tools, very little people use it in markets because they think it's not working on Forex, but it is. So that's up to everybody, but that's what it is. So here you have the Euro USD. You see here I have a volume tool and I have a lot of there, which is what I teach in the mentoring, which takes more time than just showing it here. But at least you understand why I am showing those lines inside the tool. So here you have the 2022 volume. This is the big line you will see when we will go inside here. And then when we go a little bit inside, it looks really very crowded there. I can take off the pivots. I don't need them here. I have them on the other chart. So what we see here is the next big area there. We have the yearly block volume, which is the one I just showed you. I said it's the 2022. So you see how it works. We have here a quarterly volume of the previous quarter, and that's exactly where we came to bounce from. So that's why when they say, oh, volume is not is useless for Forex, that's wrong. When we want to trade very precisely, like this chart here, we need to know where the price could stop. So we define all the level, interesting level, important level according to our tools. And then it doesn't mean each level will work. It means we have it ready, and at the same time we arrive on the level, or better say in the other way, when we have a setup and if we have a level, then we take the trade. That's very easy. When we have a setup, like here we had a setup, and at the same time, exactly at the same time, we had a support. Here, I took the trade. It's not more complicated than this. So, can look too easy, but that's the way it works. Same thing here. Support, setup, we go up. Support, setup, we go up. Same thing here. When I took the last one, it was here. Sorry, this morning you had signals, green, and I took it. Of course, the best signal is when we have the 15-minute and the 5-minute. So before, I used to trade only the 15-minute, like this one here. Here you have a 15-minute. Yesterday we had a 15-minute when we came here, and that's when we went long and we ran this move up. So the 15-minute is a stronger signal. But when we have a very volatile market like we have, and when we think the trend is on the upside, like I think now, actually at the time we are speaking, then we use the 5 minutes. So that's something I can explain, and I can give you those indicators if you want them. But for that, I need to know your TradingView ID to send directly the indicator inside your platform. So same thing for the charts. You can have all my chart, and that's what I did. I share this chart, for example. I send a link, and with the link, you can just click on it, and you will have the same chart inside your computer without doing anything. It will be updated. Each time I will add a line or move something on it, it will be changed on yours. So you can see all the level I'm looking at. And if you have the indicators, then you see the setups. Then you can trade, as I do. Very easy. Okay, so for now we are at London +5. We see we didn't really broke the start of the trend we had before the London. So that's what we had a little bit before the London. So we are now here. That's a 15-minute chart. We are now here. So we could expect more continuation. If we do not see a dirty play, we could expect more continuation on the upside. Then we would have to look at the daily data. So just to make sure we are okay, let me go to headlines, update the calendar. Okay, so we have the Spanish manufacturing PMI that is coming in about 10 minutes. You see it here at 15, so it's about 5 minutes now. Then we have Italian data, then we have German unemployment at 9:55. So we have a lot of data coming within the next 45 minutes. So we can see some up and down moves on the Euro USD. Then Portuguese is useless, and then of course that's important. So at 14 CET, which is 1 o'clock GMT, we have some speakers of ECB speakers, and then we have some light crude data here, and of course finally the most important thing for the afternoon, which will be for the evening for us, which will be the US Fed funds rates, and the most important will be the pressure just after it. So of course this morning there will be some moves in a short time, like the Spanish thing here that is coming. I will stop the recording for now.